Important update. The IRS has now officially announced when tax filing for the 2026 season will begin, and this year it is especially important to pay attention. The rules are no longer operating the way many people are used to. Several significant changes are now in effect, and they impact nearly everyone who files a return. Filing too early or filing without fully understanding what has changed could easily delay your refund by weeks or even months, or create problems you were not expecting and did not plan for. Some of the new deductions can absolutely work in your favor and put more money back into your pocket, but other changes can quietly work against you if you are not prepared. That overlap, where benefits and risks exist at the same time, is where many people get caught off guard every single year. If you depend on your tax refund to cover important expenses, if timing matters for your household budget, or if you simply want to make sure you are not leaving money on the table or making costly mistakes, this matters right now. This is information you need before you file, not after. Timing plays a bigger role this year than it has in a long time, and understanding what is happening behind the scenes can help you avoid unnecessary stress later. The IRS will officially begin accepting and processing tax returns for the 2025 tax year on January 26th. That date marks the start of the 2026 tax filing season. On the surface, that may sound perfectly normal. Tax season usually begins in late January, and that pattern has been consistent for years. What makes this season different is not the date itself, but everything else that is happening at the same time. Behind the scenes, there are major tax law changes that were signed into law last summer and are now taking effect for the first time. At the same time, the IRS is operating with significantly fewer employees than it had last year, which directly affects processing times and customer service. There is also a continued shift away from paper refund checks and toward electronic payments. When you combine all of these factors, this filing season becomes more complicated and more fragile than usual. For millions of households, tax season is not just about paperwork. It is a major financial moment. For many families, a tax refund is the largest lump sum of money they receive all year. That money may be used to catch up on rent, pay overdue bills, reduce credit card balances, or build a small emergency fund. With the cost of food, housing, healthcare, childcare, and other essentials still high, there is a lot riding on getting that refund on time and in the correct amount. One of the biggest reasons this tax season is different is the new tax law signed last summer. The legislation introduced wide-ranging changes to deductions, credits, and income thresholds, and those changes apply directly to the return you are about to file. Some of these updates sound simple when you hear them mentioned briefly, but when you sit down to prepare a return, they can add complexity and confusion if you are not prepared. There are now new deductions designed for types of income that were not previously deductible. Workers who earn tips may be able to deduct a significant portion of that income. People who regularly work overtime may qualify for a new overtime deduction. There is even a new deduction related to interest paid on qualifying car loans. On paper, these changes sound like clear benefits, and for many people they are. Lower taxable income can mean lower taxes owed or a larger refund. The problem is that payroll systems were not fully updated after the law passed. Employers continued withholding taxes throughout the year based on older rules. That means many workers may have had more tax withheld from their paychecks than necessary without realizing it. While that can lead to a larger refund, it also increases the risk of reporting issues if documents do not line up perfectly or if deductions are claimed incorrectly. With fewer IRS employees available to review and resolve issues, even small discrepancies can cause delays. A return that might have been corrected quickly in past years could now sit in a processing queue for weeks or months. Accuracy matters more this year than it has in a long time, and rushing increases the risk of problems. Other important changes are also in effect. The standard deduction has increased, which benefits the vast majority of taxpayers who do not itemize. The child tax credit has increased as well, providing additional relief for families. The cap on state and local tax deductions has been raised substantially, which mainly benefits taxpayers in higher tax states who itemize their deductions. For some households, these changes can add up to meaningful savings, but only if they are applied correctly. The IRS has stated that it has spent months updating systems, forms, and internal procedures to handle these changes. However, staffing reductions mean there are fewer people available to answer phones, process correspondence, and resolve errors. In practical terms, this means that mistakes are more costly than ever. Filing quickly but inaccurately can create far more trouble than filing carefully a few weeks later. Another major shift this year involves how refunds are paid. The IRS is continuing its move away from paper checks and toward direct deposit and other electronic options. Direct deposit is now the preferred and expected method for most taxpayers. Paper checks take much longer to arrive and are more vulnerable to loss, theft, and postal delays. Choosing direct deposit is one of the simplest ways to speed up your refund and reduce risk. Timing also matters when it comes to documents. Many taxpayers rush to file as soon as a wage statement becomes available, only to discover later that additional forms arrive or corrections are issued. Investment income forms, corrected wage statements, and documentation for certain credits often arrive later in the season. Filing before you have everything almost guarantees frustration later. There is no prize for filing first. The IRS does not process returns faster simply because they were filed in January. The deadline to file without penalty is April 15th, and extensions are available if more time is needed. Taking extra time to gather documents, review deductions, and double-check information can prevent delays that last far longer than the time you saved by filing early. Customer service is another area where expectations should be realistic. Phone wait times were already long last year, and with fewer staff, they may be longer this year. Avoiding the need to call it all by filing accurately is the best strategy. A large refund can feel great, but it is worth remembering that a refund often means too much money was withheld throughout the year. That money could have been used earlier for savings or expenses. If you consistently receive large refunds, adjusting withholding may be worth considering for future years. As this filing season unfolds, it will test the IRS's ability to manage major changes with limited resources. There will likely be delays and frustration for some taxpayers. The best defense is preparation and patience. January 26th is the opening day, not a finish line. Filing carefully, understanding the new rules, and avoiding unnecessary mistakes puts you in a far stronger position. Gather all documents before filing, understand which deductions truly apply to your situation, choose direct deposit, review everything before submitting, and track your return once filed. If you owe taxes, file on time and pay what you can, even if the full amount is not possible immediately. Ignoring the situation only makes it worse. Tax season can feel overwhelming, especially in a year with so many changes, but it is manageable. Staying organized, moving deliberately, and asking for help when needed can make the process far smoother. Take your time, understand the rules, and approach this season with care. Filing accurately matters more than filing fast, and doing it right now can save you from months of stress later.